All right, good morning. Well, I guess it could be your not morning, so wherever you are, good afternoon, good evening, and good night, maybe even. So that's a Truman Show reference. If you haven't seen that, it's actually a pretty decent movie from, or not from, but it's with Jim Carrey. It's one of the few movies I can actually watch of his that doesn't drive me absolutely insane. I normally can't stand his movies, but I digress. So what we're going to do today is we're going to go over chapter 10 problem assignment. It's worth 25 points. Don't worry about the due date because I'm recording this in 2022. This video could last who knows how long until they update the book, but either way, we're going to work on this problem assignment. Okay, so we're going to click and continue. Your multiple choice questions, I'm not answering those, okay? Those ones should be pretty straightforward. You should be able to answer those multiple choice ones. So let's look to number 11. And I'm not going to work on every single one of them. I just want to show you how these work. I want you to be able to kind of articulate that and calculate all this stuff. So right here in this one, we're going to be dealing with three different depreciation methods: straight line, units of production, and the double declining balance. I hate the double declining balance, but it's still there. All right, so we have a machine that costs $217,000, 4-year useful life, an estimated $19,000 salvage value, and it's installed in Luther Company's factory on January 1. And then it gives you the estimated number of units produced, and each year how many units were actually produced. Remember, we cannot depreciate our equipment below its estimated salvage value. Compute depreciation on each year using the different method. So the straight line method is really simple. I'm going to pull up this calculator and pull it over here. Just kidding, it's not cooperating very well. All right, our straight line method is really easy. We're going to take our cost. In my case, it's 217,000. We're going to subtract out our salvage value, and then we're going to divide it by its useful life. 4 years, it says. So our annual straight line depreciation expense is going to be $49,500. The cool thing about the straight line depreciation method is once you've done one, you've done every year. Oh, what? It doesn't let me paste. That sucks. All right, so this should equal our cost minus salvage value. So let's see if it did. 198,000, sure did. Okay. And remember, you come up here, you click check my work, no problem. There it is. Okay. Let's go to units of production. Units of production method. What we're going to do is we're going to take our total amount, subtract out our salvage value again. This time we're going to divide it by our number of units we expect to produce. So we're going to take that 217,000, subtract out the 19,000. This time we're going to divide it by how many we estimate we're going to use. We think it's going to be 495,000. So, sorry, I'm getting a little bit of a delay on my computer. There we go. Okay. So our rate for each unit we produce is going to be 40 cents, 0.4. So in year one, let's see if it provides the numbers down here. Thank goodness. Okay. So our depreciable units here, is it? Oh, return to question. I'm like, dude, is it not letting me put anything in there? All right, go to units of production. So our number of units, we're going to just fill in this. The first year is going to be 123,000. Next year, oh, these are all 0.4. 123,500. I'm doing that because look, we can't depreciate it lower than the number we estimate at 495,000. So I'm just putting all of these in here to see as long as I don't exceed the 495,000 units. So I'm going to get my calculator now. On the last year, I'm going to go 495,000. I'm going to subtract out what I have already accumulated, which is 366,600. So that means of this 138,400 units that were produced that year, I'm only going to calculate the depreciation expense against 128,400. So my depreciable units can only equal what we estimated up here. Otherwise, we're going to depreciate it below its salvage value, and we can't do that. There's another trick on how to do that, and I'm going to show you that now. So look, let's say you don't know what this one is, okay? Actually, let me see if I can put that back in there. 128,400. I'm actually just going to leave it here on this calculator, so we can't see that now. But let's go. Oh, actually, I need a new calculator. Let me open up another one then. If it'll let me do it. Boy, my computer is really delaying today. I think this is like my 4th year with this computer, and I think I need another one. I think it's time to bite the bullet and get a new computer. All right, new calculator. Here we go. So we're going to take 123,300 times 0.4. So our depreciation expense in year 1 is going to be 49,320. And we're going to do that in each of these years. 49,400. Sorry, there's a little bit of a silence. 47,920. All right, so when you get it to this point, whether you know this number or not, it really doesn't matter because we know we can't depreciate it lower than the salvage value. The salvage value. So what we could do if we didn't have that other number is take 217,000, subtract out 19,000. That's our depreciable amount is 198,000. Well, we've depreciated it to 146,640. So let's take that out, 146,640. So we know our depreciation expense has to be 51,360. 51,360. So if we want to find out what our depreciable number of units were, we're going to take that 51,360 and we're going to divide that by 0.4. 128,400. Let's pull that up. That's our other one, 128,400. So you can go about it either way. Little bit of algebra. I told you guys from the beginning. Accounting is add, subtract, multiply, and divide with a little potential algebra, and that's it. So we're going to go with that 128,400, and we should be good to go. Let's check our work. What? Oh, brother. Well, I don't know what that was all about, but obviously I had that assignment open because I was freaking in it. Sometimes McGraw-Hill makes you laugh, makes you want to cry, actually. And now we have new numbers, so everything I just did is moot. You have to trust me on it, though, that's what units of production was. So now we got new numbers, and we have the double declining balance method here. Let's try this one out. Hopefully we can do it. So we're going to take our beginning book value, and we're going to take, let's see, we have this time now it's $207,800, and our book value. So our book value right now is $207,800. Our depreciation rate, we got to figure out what it was for our straight line method. It was divided by 4. So that's going to be a 25% rate. So we're going to do 50% because we're doubling that. So 50%, and we're going to take, that was from the old stuff. 207,800 times 0.5. So our depreciation expense should be 103,900. So there we go. So now our book value is going to be, should be 103,900 because it's half of what that was. So 103,900, still 50%. And spoiler alert, it's going to be 50% all the way down. 103,000, what's basically half of that? 51,950. So our book value over here is 51,950. We're going to just follow that. And then what's half of that? 25,975. And then our book value over here is 25,975. But remember, we can't depreciate it lower than 17,000. So in the last year, we're going to have to take this and subtract out 17,000. So even though this is clearly not half of that number, we got to put that in there, 8,975. 8,975. And that's how much, because we can't go below book value. Salvage value. So there we go. Those are the 3 depreciation methods in a nutshell. We will go over some more stuff here in a second. All right, let's go to the next question, see what we got there. So I've shown you the three methods here. If by some chance some of these, I know there's going to be more on this because, or more on the depreciation and stuff. I'm not going to redo more of those just using different numbers. So if there's more depreciation calculations, I won't be doing those again. Well, maybe I will. I don't know. We'll see. All right. So first of all, here we got the situation here. I always like to read kind of what we're looking for. Allocate costs incurred by Mitsui to the appropriate column in total columns. So what we're going to need to do here is, let's read this here. We bought, Mitsui Company pays a lump sum amount for land, building 1, building 2, and land improvements. Building 1 has no value and will be demolished. Building 2 will be an office and is appraised at $540,000 with a useful life of 20 years and a $75,000 salvage value. Land improvement 1 is valued at $570,000, expected to last another 19 years with no salvage value, and the land is valued at $1,890,000. Company also incurs the additional cost. Boom, there we go. So what we bought is what we got to allocate. First of all, we're allocating $2,700,000 costs. We've got land, building 1, 2, and land improvements 1. We're demolishing building 1, okay? So we're not going to allocate any of the costs to that. We're just going to be doing it to land improvements, land, and building 2, because it doesn't have any value to us at all. In fact, it's going to be a cost to us. But let's see how much those ones were appraised for. And you know what? In fact, I'm going to pull open a spreadsheet for this one. Let me give me a second to get a new spreadsheet open. I don't even know what that other one was. It's probably something for club esports or whatever. Because what we got to do is we got to calculate what we're going to allocate to each one. And I want to show it other than in a calculator. Sorry, my computer is really thinking on this one. This video is going to be too long, but it's just because you probably make this thing go like 2 times as fast. And I'll be talking like this. It'll be really fast, but you know, you just probably get through it. All right, here we go. So I'm going to populate this stuff on this. Well, I want to show you. Let me try and see if I can't do it. All right. Nope, let's keep it. All right. So our total cost is going to be $2,700,000. Let's just make that into pretty dollars so I can see. Okay. And then we have building 2, land, and land improvements. So those were valued at, let's see, building 2 was appraised at $540,000. Land was appraised at 189 or 1.9 million. I gotta see this, and I wish Excel would like. Well, I guess that wouldn't make sense. Land improvements there. Okay. So what we want to do is we want to find out what the total value of each of these assets that we just acquired was. So it was $3 million. So what we want to know is what percentage was each of these to that total amount. So building 2 is 18%. Land, we're going to take the total appraised value and divide it by the total appraised value of all those assets to come up with the amount we're looking for here. All right, so these should be percentages. It doesn't matter on this model I'm building that if it's appraised or not, or if it's percentage or not. So we're going to take this percentage, and this is how much we're allocating, okay, to building 2 of the cost. So basically we got this for $300,000, a $300,000 discount, because we only paid $2.7 million for a $3 million appraised value of this stuff. So, or maybe the owner knows something we don't. I don't know. So let's go ahead and let's go ahead and plug this in. Our appraised value here is $540,000. I guess I could have just done it in this, but I like Excel too much better. Whoops, that was land, 540,000. Land, 1890123. Land improvements, 570. Okay, so they're showing the 3 million. Percentage of appraised value, we got 18%, 63%, and 19%. Total cost of acquisition was, we're looking for this 2,700,000. Oh, it wants us to select it. Come on, are you kidding me here? I don't even know why they would give you that other one. They would probably want to give you 1 million, the 3 million total, not that. So we're gonna allocate 486,000 to this one. Crap, see, I'm doing it wrong. I'm doing it wrong because I did it differently in order. Should be 486 here, and then it should be land is on top. 1,701,000. And then 513,000. Okay, let's check our work. Make sure we got this so far. All right, we're looking good. Okay, we're looking really. Oh, what is this? Are you kidding me right now? How can I get everything else correct, but these ones were wrong? Oh, it's because I reversed them again because of the because of the difference. So this should have been 63, and this should have been 18. Okay, so that's what happens when you do this, and it doesn't perfectly translate. So that I'm going to get off Excel. I think it's just kind of being a little too finicky for me right now. Gosh dang, I wish this stupid. I have this thing up at the top that I can't see. It or it blocks my vision, and I can't move the screens around until I move it. All right, so we have the land, the purchase price. We're going to allocate it based on this up here. So the land purchase price is 1,701,000. Building 2 was 486,000. Building 3 is not. We're going to get to that in a minute. And land improvements 513,000. Okay. All right, so let's look at building 3 now. We're going to construct building 3 here. So cost to demolish building 1 is something that we're going to need to account for as well. The demolition, I believe we're going to put in the land, 344.4. So we got to account for all these costs. Cost to demolish building 1, we're basically taking it out, so it's going to be gone. The additional land grading is going to go to land. Remember, land, anything that is horizontal on a property is going to be contributed to land. Anything vertical is going to be a separate asset. So we have 193,400 for land grading. 193.4, right? Yeah. Okay. So now we're going to construct building 3, and it's got all this other great information here. Fantastic. So 2,262,000. Building 3 is 2262. All right, well, they want you to put it here because it wasn't part of the purchase price, even though you constructed it, you know, that kind of stuff. New improvements here, $178,000. We're going to put that right here, 178,000. There you go. Let's check our work. All right, so we're looking good on this one. I think this part of it is correct and done. So let's return to the question. And now it's time to go on to our next question, which is going to be built off of what we just did. So we may need to be bouncing between the two. So we're going to prepare a single journal entry to record all the incurred costs, assuming they are paid in cash on January 1st. By incurred cost, we're talking about, I believe, the purchase of the plant, the new. Well, let's just go with it and see. I'm pretty sure they just mean the purchase price. I don't know that they mean all of this as well, but I could be wrong. Let's find out. So we paid out, let's say it's cash. Geez, boy, that'd be great if it was cash, huh? 2,700,000. So we're going to credit that. So let's do first to land. No, I didn't say that. I said land. Clearly spelt out land. Okay, so we're buying land. What did we allocate it? What did we allocate land to? We had at land at, I'm going to write these down. Actually, let's do this. I'm going to hit the Windows key and S to take a snippet shot. And in a second, my computer will realize I actually do want it to do something. Boy, my computer's in rare form today. Windows S, isn't it? Or what? All right, forget it. I'm just going to write it down. So we have land is 1,701,000. Building 2 is 486, and land improvements 1 was 513,000. Okay. And then let's also do, you know what? Actually, it's probably going to want this. Let's just write that down just in case. Land, building 2, 3, land improvements 1, 2. Okay. So land was 2,238,800. 486. That didn't change. Building 3 is 2,262. Land improvements 1. Oh, crap. I put it up here. It shouldn't have been there. Wonder if that was wrong, because I don't know. Did I see that? Did I check it? Oh, no, that's right. That's land improvements 1, right? 513. Sorry, brain fart. Sometimes I do it too. Crap, now my slow computer is getting slower. Okay, so I just paused the video because everything started getting really slow and I couldn't figure out why. And then I realized my computer just decided to start the antivirus software going, as well as the software updater. And so, like, everything was going crappy all at once. And so it totally bogged down my computer. All right, but I digress. Let's get back to it. I mean, you guys are seamlessly seeing it, but I had to endure a great period of time. Anyway, all right. All right, so that was land. All right, so we pulled this information from the prior slide. Yes, yes. The next one is going to be building. What? Well, I'll tell you what, my computer is in rare form today. All right, come on now. Building. If I can type. Building 2 was 486. Nope. And then building 3 was 2,262,000. And this is just the information I got from the prior page. You should be able to do it. Land improvements 1 was 513,000. And then land improvements 2 were 178. Okay, and then we're just going to add all these up. I'm going to grab a calculator. See how much faster that calculator popped up? So much faster. Okay, so we're going 5, 6, 7, 7, 8. And I guess we're putting this under cash. Let's check our work. All right, looking good, looking good. All right, so the next one is using the straight line method. Prepare the December 31st adjusting entries to record depreciation for the first year on these assets. So you're basically just going to take what we just calculated on the prior one and depreciate these based on the information you did up here. I'm not going to do that again because we did it on the first one on the problem 11. So we're going to go ahead and move to the next one here. So this problem is going to be covering whether or not you understand the difference between capital expenditures and normal expenditures. So right now, let's look at this. We're going to be preparing journal entries. So we paid this much cash, sales tax for transportation for a new loader. The loader is estimated at 4-year useful life and $32,200 salvage value. When we buy a piece of equipment, anything it takes for costs to get it from wherever it is to us and in a workable condition is going to be capitalized as part of the asset So we're going to come over here and we're going to debit our, I don't know, do we want it to be load or no? Let's try equipment then. All right, equipment. So what did we pay? Let's look at this here. We got 322,000. We're going to also pay sales tax for this, so we're going to add that to it. Transportation in as well. If we had to test it before we got it to work, we would include testing costs. We would include any imports, duties, anything like that would go into this. But in this case, it was so 336, 380. And then we're gonna just, I guess, go cash or accounts receivable or notes payable or accounts payable, not notes payable. Okay. All right. So we got those done so far. Okay. So the next journal entry. So we paid $5,000 to install air conditioning in the loader to enable operations under harsher conditions. This increased the estimated salvage value of the loader by another $1,500. So because this is going to be increase the salvage value, it's going to improve the situation with the loader. We're going to go ahead and capitalize this. So we're going to go ahead and throw this under equipment. I know how to spell equipment. And then we're going to go cash, the credit, both for 5,000. Okay. Let's go on to the next one here. We're going to record annual straight line depreciation on the loader. So what we're going to do is we got to come back to this first one here. How much do we put under this equipment? 336, 380 plus that 5,000. Okay. Our salvage value was 32,200. So we're going to subtract that out really quick. But then we're also going to subtract out an additional 1,500 because that increased the salvage value. So now we're going to depreciate 307,680, and we got to divide that by its useful life, which was what? 4 year. So we're dividing that by 4. So our annual depreciation should be 76,920. I've already forgot the net number. What was it? 76,920. All right, let's check our work here. All right, everything's looking good so far. Turn to the question, and let's go into number 4. We paid $4,100 to overhaul the loader's engine, which increased the loader's estimated useful life by 2 years. Capital, same thing what we did with number 2. You're going to debit the equipment and credit cash. Paid $1,025 for minor repairs for the loader after the operator backed into a tree. Nice job. These are minor repairs. All right. These are not going to be capitalized. We're going to expense these. So we're going to go ahead and we're going to debit our repairs and maintenance or something like it. For $1,025 cash or cash, or we're, whatever. Could be accounts payable, whatever. And the last one, my guess is we're going to calculate the depreciation. Yeah, do the depreciation, except this time, remember, you have 2 more years now. You got to recalculate. All right, I'll do this one too. Fine. Number 4, debit to equipment for 4,000. I wanted you guys to do a little bit of this, and then cash 4,100. Okay. And I'll check my work just to show you that yes, we're right. Okay, everything's good. Okay, so because you had some changes, we have to have a change in estimate here. So I'm going to pull open my spreadsheet again from before. Clear it out. So let's get this down. We had... Go away, you... This thing is just bugs me. It doesn't go back and doesn't go away. All right, I'm just going to pull it over here so I can actually see things. So you can see this over here. So our cost was 336,380. Useful life was 4 years. Salvage value was 32,200. But then we had this change salvage value by 1,500. Formatted from before. Okay. And then we had depreciation. We got to know how much depreciation we've used. Oops. I totally spelt that wrong. I know. I'm just trying to do this right, though. Okay. Then we added, oh crap, I didn't add the cash to the cost. So we got to add 5,000 here. And then we got to add 41 there to the cost of the equipment. Then we're adding 2 years useful life. That didn't do anything, so let's calculate our depreciation now. So now our total cost of our equipment is going to be 345,480. Total useful life is going to be 6. And then our salvage value in total is going to be the combined of 47,200. Now keep in mind, we've already depreciated it for 1 year. So we got to do this calculation over here. Cost still 345,480. And we're going to subtract out accumulated depreciation, which in this case is just the depreciation of year 1. So we're going to go, well, it's just the same amount. Had there been another year, we would have needed to do that, add up all the years that we did. Okay. So now that's going to equal this 268,560 is what we have left to depreciate. Oh, I sit corrected here. Hold on a second. We need to go, and I should be doing this anyway with cell referencing. We got this minus this. Okay, that's better. Now we got some good cell referencing. Now, how many years? It's not 6 because we've already depreciated it 1. Okay. That should be just a number, but it's 5. It's fine. So now we're going to go depreciation expense in year 2. It's going to be this divided by that. Should be 44,272. $44,272. Let's see if I got that number right. Interesting. All right, let's see what I did wrong. All right, I think I found it. I put 15,000, not 1,500 right there. That's going to change things a lot. Let's see if that was it. I paused the video because I didn't want you guys to suffer through me just going through the numbers again. But that's basically what I did. So I'm going to pull Excel over here on my other screen so I can see it. So I have now 46,972. And let's see if that number works. Yep, 46,972. So I just had a wrong number in there. In my model, I typed in 15,000, not 1,500. So now it flowed through correctly. I take my total amount, salvage value, and my new useful years, but you got to take one off because you've already depreciated it for 1 year. Cost, which is this minus salvage value. I should say cost minus salvage value, but whatever. Less the accumulated depreciation, which we've already accrued for the year 1. This is our depreciable amount divided by the remaining useful years in life. Total 6 years. We've already used up 1. Depreciation expense for that year is $46,972. All right, and that's going to be a debit to depreciation expense, credit to accumulated depreciation, just like in number 3 there. Okay. All right. Sorry about that. Hey, but that's why we check. That's why we can look and see if we've done something wrong. Prepared journal entries record the machine's purchase and cost ready for use. All right, this is, again, just an exercise in you being able to understand the differences in what you need to capitalize in getting a machine ready. We've already done that. Prepared journal entries to record depreciation of the machine, straight line depreciation method. Okay, you guys can calculate this again. But let's look at this. You record the year of disposal, year-end adjusting entry for depreciation expense of the used machine. Okay, it's not asking for the actual disposal, I guess. I think there's another problem on that anyway, so let's just do that one. Oh, okay, so it is a link. So let's work on this one since it's linked. I get it now, okay. No, there we go. All right, so we're going to go ahead and the machine's purchase in, prepare journal entries to record the machine's purchase and the cost to ready it for use. So let's go through these costs and see, and I'm going to do this over here on Excel. Again, it's just easier for me. I like it. It's fun. Makes me happy. Just kidding. I'm being stupid. All right. Try and give you guys a little bit of entertainment factor here. Costs. Okay, so you bought a used machine. First of all, there's your first problem. Don't buy a used machine. $240,000. On January 3rd, Onslow paid $6,000 to wire electricity to the machine. Okay, we're going to capitalize that because that's in order for it to be able to be used. We paid an additional $1,200 to secure the machine for operation. Got to have that, otherwise it won't work. So we're going to capitalize that. The machine will be used for 6 years. Salvage value, straight line used. Okay, at the end of the 5th year, it's disposed of. So basically what we have here, useful life was 6 years, salvage value $28,800. All right, so here's what we got. All this information over here. So our total cost, let me just add these together. So we're going to be capitalizing $247,200. So prepare the journal entries, record the machine's purchase, $240,000. So we're going to go equipment or machine probably. And then that's 240. I'm assuming cash. 240. Always remember debits before credits. Sweet. Next journal entry. Okay, they want you to just go through each one of these, but we've already determined that it is the same. Okay, let's check it out. All right, cool. So what I'm going to do is I'm going to write this down. Oh, no, we already did it in Excel. Never mind. We already have it in Excel, so I don't need to worry about that. Let's go to the next question now. Prepare journal entries to record depreciation of the machine at December 31st. All right. Oh, whoops. For the first year, adjusting entry, depreciation expense for the used machine. We bought this on January 2nd, so no partial year, partial, anything. So we're going to come over here, and we're going to go depreciation expense or machinery. They always put up something else just to throw you off, see if you bite on it. And we're going to take Okay, I'm going to show you this. I just added the word depreciation expense here, and I'm going to take this minus this, and then divide it by this. And finish with that there. Boom. 36,400 is our depreciation expense. Accumulated depreciation for the machinery. Our credit. Let's check that mess. Yay. Go up here to number 2. Record the year of disposal, year-end journal entry for depreciation expense. Newsflash, 36.4. It's the same thing. Every year is the same thing. Can't spell, guys. Oh, there it went. Okay, should be good now. Oh. Okay, it just, I must have done something funky because it should have been depreciation expense. All right, now we check our work. Okay, now we're happy. All right, now we've done this for 5 years. Okay, we've done this for 5 years. Now we're going to dispose of this thing. So let's come over here to our little model we've built. Okay, I'm going to get rid of all this because that was from that prior one. So our depreciation expense is this. Let's just make a little table here. Depreciation expense, and I'm going to do this year 1, year 2, year 3, year, was it 4 years? I think. Six years. Year 5, year 6. All right. And then we're going to take this. And this is what it would be for each year. Accumulated depreciation. We're going to just take this, and then we're going to take the prior balance and add the current year depreciation to it. So if we were going to depreciate this thing all the way to year 6, we would get up to 218,400, which just so happens, let's just check this out. Watch, I'm going to add in a new line, and I'm going to say depreciable cost, just so that we can see this. Look at that. All right. If we got to year 6, then we would depreciate this thing fully. But it says here in year 5, it's sold under 3 different circumstances. So let's look at this. In first year, A, it's sold for $24,500. Okay. $24,500. Man, I love this stuff. I just geek out on this. It's so much fun. So what we have to do is we have to get rid of this piece of equipment if we've sold it, all right? So right now, we have a piece of equipment on the books for $247,200. We've sold it in year 5. Let's put a little line under there so we know what we're dealing with. It doesn't tell us, well, it tells us the amount. We sold it for $24,500. So let's do this. Let's do it over here. We need to know what we're going to deal with here. We know we're getting cash. Cash is going to debit, and we know we're getting $24,500. Okay. Then we need to get rid of our accumulated depreciation. Accumulated depreciation's normal balance is a credit, so we're going to debit that to get rid of it. And that amount is going to be here in year 5. Okay. Then we're going to either have a gain or a loss, right? A gain or a loss. And we got to get rid of the equipment. So we're going to credit equipment for the cost that it cost us. All right. Now, I'm going to show you this. This might be a little advanced, so if you don't like it or if you don't know, if you don't like it or you don't want to do it, it's fine. You don't have to, okay? Still use the formula. Just add it all up and then subtract or whatever. But what I'm going to show you here is I'm going to go equals if this minus the sum of this is greater than 0, then I want it to not put anything in this column. Otherwise, do the math, I9 minus the sum of H6, H7. Okay? I did that wrong because that should have been in here on this one. I thought I was in the other. I thought I was in this one. Because what we want to do is we want to know, is this a gain or a loss? All right. And this is just some fun formatting I'm showing you how to do to use this so that you don't have to like think, because sometimes they give you different scenarios. All right. Let's see if I did this right. Yeah, I did. Nice. Okay. So right now equals, if this is greater than 0, then we want this to be loss on sale of equipment. Otherwise, don't put anything in there. So I'm geeking out. I'm sorry. If you guys can fast forward this part if you guys are like, Brian, this is so freaking lame. Okay. But dude, you might like, I don't know. I'm liking this. I'm liking this. Okay. So here's our journal entry. Okay. Because we sold it for less than what our book value was, we had equipment of $247,200. We got cash at $24,500. Accumulated depreciation, we got those off the books. The difference is a debit, meaning that we sold this with cash and we got less back than what it was worth on our books. So we have to take a loss on the sale of equipment. Basically represents the amount of the cost we never got around to depreciate and the buyer didn't pay for it. And that's why I did this way, because watch this. The next one is 98,000. Let's put this journal entry in real quick. Let's put this journal entry in, and we will go on our merry way. Cash, 24.5. Accumulated depreciation for the machinery was 182,200, and then loss on sale of machinery, 40,700, and then equipment. Oops. Machinery, equipment, sue me. No, don't sue me. Okay, I don't got much money. You won't get much from me. Okay, good there. All right, it's a loss because the value of the machine was more than the combined cash and machinery of the accumulated depreciation, which means we didn't expense enough of it to make it to where we made anything, so we have to take a loss on it. Okay, let's now go back to this and let's look at what happens when it's 98,000. Now watch this. This is what I love. That's why I set this up this way. 98,000. Watch our journal entry. If I did it right. Ah! Okay. Why? If H8 is greater than 0, loss on sale of equipment. Otherwise, don't do anything. Put anything in here. That should have done that. And this one should have been gain on sale of equipment. Oh, but watch this one for some reason. Oh, I needed to change this formula to being this one minus I9 there. If I bet I need to just format it this way. Yeah. Okay. All right. All right. Let's go back and do it again. Let's go back and change this. It was what was it 24-8? Okay. I didn't change this one. What is going on? You see what I was trying to do, though. Bottom line is the numbers work. What was it? 98,000. I've already forgotten. Yeah, 98,000. Well, you see what happens up here, though. It moves over here. I would have to play with this a little bit just to see why it's not doing this. This stuff should be switching around. Anyway. Okay, guys, I know that this video is getting really long, but I figured it out, okay? I had to fix this formula. I had to add, it was looking at it as a numeric until I changed it as a text, and so it was changing some of the logical arguments and stuff. So I had to make it just look at it solely as text. And so now watch, if it's 28,000 or 25,000, we see that it's a loss. Now when I change it to 98,000, it converts it to a gain and it changes everything. That's what I'm talking about. This is the kind of stuff that if you build this once and you get it to work once, you don't ever have to do it again. If you build this model right here, then everything that you do, I mean, you would want to make sure that you gave yourself a lot of room for your years and stuff like that. But this works. I mean, this is a fun model you can do yourself, okay? And you can even improve on it if you think you can do that. And I'm sure you can. I don't have all the answers. I'm not, perfect at everything. So anyway, I digress. Let's get back to the homework. I apologize. The journal entry is going to be here except for credit as a gain. Let's just move on. We got a couple more. Let's see what we're going to do. Okay, this is going to be mining. It's going to be depletion. It's basically the same thing as your units of production. All right, the cost of the mine. You're going to debit the mine or the land or whatever and credit cash. All right. Your next one here, record the cost of the machinery, debit cash or debit machinery, credit cash. Then you're going to come over here. You're going to do the formula that you should have gotten. You're going to go the depletion per ton, how much you expect to, or the cost you need to deplete versus the tonnage you actually are planning on extracting to get a per unit depreciation rate. Then you're going to calculate each year how much you pull out, and that's going to be your depletion up to the amount to where you can't deplete anymore. So it's basically the same as the units of production. So I'm not going to show you guys this because I want you to work through that one anyway. And then how would you depreciate this machine if you were going to use it at another site? Okay. Just go ahead and use your logic here, what do you think? I'm gonna let you pick it. You got 3 shots and you get to check your work, so you should be able to figure that out. So anyway, that's your homework, you guys. Sorry this is long. Hopefully you guys learned something though. Take care, and if you have any questions, let me know. Have a good one.